This panel is all about collaboration between established players and Fintech. My name's Yvonne Dunn. I'm a partner at Pinsent Masons and I head up our FS, Financial Services, Technology and Fintech business. I guess the narrative around this whole area has changed over the years. It started out much more combative. It was about established players versus fintechs, but I think latterly it started to change in a slightly more helpful direction into more talk about collaboration, which we believe makes sense because both sides of the equation have something to offer the other, as I think we'll get into in this conversation. For established players, the idea of partner or perish is a threat, and the idea that if you don't get involved in collaboration, you could find that interesting, funky new fintechs are getting between you and your customer and turning you into just a data pipe, which is not where you want to be. But that's only one side of the story, because the other side of the story is that when you're playing with people's money, customer trust is really important, and that can be something that fintechs maybe struggle to get traction with, or it takes longer to build up. And there's also the experience of navigating the regulated environment that obviously incumbent players have in spades from over the years. So again, both sides bring something to the table. So we'll get some good questions going, hopefully from me, and also an opportunity for you to ask questions as well as we go through. What I thought I would do to start with, though, is get my panel just to give us a very brief introduction to themselves. So the 30-second version of you, please. We start with you, Kirsten.
Great, lovely. Thank you so much, and good afternoon, everyone. My name's Kirsten Connell. I'm the Managing Director at CyLon. CyLon's the world's leading cybersecurity accelerator. So we find, invest, and grow the world's most exciting cybersecurity companies, and we've been going for 3 years and have supported over 50 companies from 30 different nationalities, so very international.
I'm Iwama Hastings, Head of Business Development at Priviti. So we're an Irish fintech. I'm based in London at Level 39, and we provide a patented solution for managing consent for data sharing and transactions securely in real time. And we've got offices in London, Dublin, Galway, Singapore, and soon launching Dubai.
I'm Alison Eckford. I'm a partner in the technology group at Pinsent Masons in London, and traditionally act for clients in main financial institutions in terms of technology sourcing and digital transformation, but also work with startups and do training through the likes of CyLon for those who are looking to engage with those financial institutions.
I'm Elie Shuggi, and I head up startup delivery for Aviva, and the role is effectively around engaging with startups, technology platforms, and disruptive business models that can impact financial services and finding ways of working with them.
Hi, I'm Dearson. I work in Barclays' legal team. So previously I've supported from the M&A team, buying and selling parts of the bank. For the last few years, mainly selling. But now particularly focusing on Barclays' UK business, often looking at fintechs, how we might work with them, and lately the new UK ventures business that we've stood up, and just trying to build a startup effectively within Barclays.
Great, fantastic, and it's a good cross-section of different constituencies here today, so that should be useful. I suppose just to start, I'm going to start with Tyler and Elie. I'm interested in your views, so Tyler, you go first. Where does collaboration sit amongst all of the different areas that you look at in terms of growing and developing the bank? Because obviously you could invest, you could buy people, so where does collaboration sit in that?
It's a big part of the toolkit. You're right, there are lots of different ways of pursuing our business goals. Usually we start structure agnostic. It starts with, does someone have a good problem to solve? Is there a customer need? And then through engagement with the fintech ecosystem, which we do in lots of different ways, I think we're getting more finely tuned into where that can be best pursued through whether it's an organic build out or something like a B2B2C business model. That can be done in itself any number of ways through white labeling, licensing IP, or maybe investing. But it has to start first of all with what's the problem, what are the needs, and then how can we best meet those? If we're going to work with a fintech, what do we bring to that relationship? So it's very much driven by needs.
Yeah, that makes sense, absolutely. And Elie, your thoughts?
So collaboration is really critical to getting things done fast. The kind of startups that collaborate well have incredible subject matter expertise, and they can turn on a dime. And for large organizations, there's real value in that, especially around initiatives where the IP, who owns the IP is kind of really important, and it's something we would love to build in-house, but either don't have the capacity or appetite to do it by ourselves. So there's absolutely space for collaboration in many scenarios.
Absolutely, that makes sense. And I suppose then if we start to talk about these collaborations, Alison, let's live up to stereotypes and have the lawyers talk about challenges. So, we do a bit of work in this space and we've seen a lot of that, but I'm interested, just give me your thoughts on what you think are the big challenges around these collaborations.
Well, I think when I've previously answered that question, it goes back to your initial point that the biggest challenge would have been suspicion in a more of a competition environment. And I think it's worth recognizing there's been a real shift, and that has changed the whole climate, which is a good thing.
Yeah.
And there's a but. If I had to choose three, they're probably more practical than anything. Identifying the right partner in the first place is a minefield. For the financial institutions looking at potentially thousands of fintechs, it's difficult to, at different stages of their life cycles, it's difficult to pinpoint exactly what might work best. And from the fintechs, looking at very complex bureaucratic financial institutions, they can be difficult to navigate, especially those that are particularly siloed, which would probably lead to my second challenge around agility. And as you just alluded to, agility and being nimble are all the good things about fintechs. They're not necessarily words we associate with financial institutions who have more protracted procurement processes and have lots of processes generally. So that can be a little bit stifling and in some cases crippling when you're talking about 90-day payment periods or proof of concept development. But ultimately, I think although they may have very different cultures and be very different animals, if you can get the right people together and focus purely on the customer experience, then that gets you more than over the line.
Yeah, absolutely. And I guess from the fintech's perspective then, looking in and just building on what some of the things that Alison was saying there, Mia, you guys have been around for a little while now, so you'll have some war stories, some views, What do you think, what would be your advice? What do fintechs need to know about engaging with more incumbent or established players?
Sure. I think, as you've mentioned, I think fintechs need to understand that large institutions have systems, process, and protocols that they have to follow. They have to mitigate risk. They can't just make decisions quickly or do something in one day, even if they want to. So it's just understanding that and being patient and realistic about timescales, not trying to push them too much. I think we also, as fintechs, we need to understand that within an organization, it's a complex network of business decision makers and a very complex business case that has to be made. So it's really helpful, first of all, to find a sponsor who's very supportive and very direct and open with you and can give you that advice, as well as to seek real kind of market validation and insight. So we've definitely gone and talked to lots of other, contacts at banks and who are working in the same business lines, and seeing what problems we can solve rather than just trying to push our product. And also understanding that when you're presenting that product, you need to appeal to the different business areas. So for example, like IT, compliance, operations will all have their own problems that they need to solve, and how can you solve those pain points and appeal to them rather than just trying to push your products.
Yeah. I guess that makes sense. And Kirsten, in your role, you will see obviously a lot of businesses coming through that want to engage with the established players. So what's your advice to them about how best to do that?
Yeah, very much echoing everything that's been said, especially what Mia said about finding a champion, realizing how long it can take. And I think the main positive outcome that we see from the large corporates, perhaps one thing that hasn't been mentioned so much, is more the cultural experience of engaging with a startup. So how passionate corporates are to come in and soak up that energy, and yes, the entrepreneurs can move fast, and so that's a little bit infectious, so they really enjoy that. And then from the startups perspective, it's a huge hurdle when it comes to fintech, cybersecurity. asking a large corporate to risk their IT infrastructure to be the first person to purchase your product, whoever's signing off on that is really putting their neck on the line. So I think for a founder, it's a bit like raising investment. It's just making your first sell, it's building that relationship, building trust. Again, it's been mentioned, but really taking the time to do that. But our experience has been hugely positive. I think what you also said about the IP threat, startups, in my experience, can be quite nervous speaking with large organizations because they sometimes think, they could steal my idea and build it over, not quite overnight, but what's stopping them from just going ahead and using my idea? But in our experience, large corporates want to collaborate with startups. They would get a terrible reputation if they stole your idea and executed it. And I think secondly, they would never be able to execute it as well as the startup can themselves because, Taylor, I think you mentioned it, they have deep sector expertise and that combined with the passion just can't be replicated overnight. Yeah. So we've had hugely positive experience of both large organizations being really open and willing to work with startups and forgoing some of the issues that you mentioned about long procurement cycles, the fact that maybe a startup has to have got a healthy balance sheet or has to have been operating for more than 5 years, all these barriers. So I think once you build that relationship, then a champion from within the large organization will find loopholes, will help you, and then from a startup perspective, it's also hugely positive for this.
Yeah, okay, no, that's good to hear. And, Alison was alluding to the fact that there are so many fintech businesses, potential partners out there at different stages of their development. And so, Tyler, I guess what I'm interested in is, what is it that a fintech does that makes them an attractive collaboration partner for Barclays? What makes you swipe right for a fintech?
I suppose it starts with there's a lot we need to do. And I think that probably is where the focus is. At Barclays, we've really been working on a lot of what we've talked about. We can obviously talk more about that. From the fintech side, it's fantastic to see as the industry matures even further, that support that everyone gives each other, the muscle memory sort of building up on all these tips and tricks that we're discussing, a great understanding of the business case, a great understanding, I suppose, of the sensitivity of large banks, a willingness to be, open in that process, sharing lots of information, that balance between moving fast and setting a really great foundation for long-term relationship. I think one good example of that is increasingly we're seeing good discussion about technical integration up front, rather than just a discussion around the fundraising. And we all understand cash is important, so it's appreciated that people have an eye to that. But actually, if you want to grow really long-lasting relationships, thinking about the different phases that they'll go through, even potentially where you may, for example, start with a white labeling solution, but actually as a large institution over time, maybe you want to take back a bit more of the ownership of the customer engagement or parts of that value chain. Talking about that up front, I think, is where increasingly we're moving, and that's where we're being more successful.
Yeah, essentially. Elie, does that resonate with you? Do you have similar views, or is there anything different that, is the secret sauce that attracts you?
I think it's similar challenges. It's kind of like a mechanical analogy. Like corporates have torque, whereas startups have speed. And finding a way to bridge those two worlds is what drives decisions, right? I mean, obviously, problem statement, how we solve it, how we address it. But to collaborate successfully, a startup has to understand the way a corporate engages, and a corporate has to have the ability to work around the constraints a startup has. And that's a generic paradigm that has to fit into place for there to be liquidity in the relationship. Otherwise, it goes south very quickly. Yeah, absolutely. And I guess just to keep going on that theme, though, thinking about when you are evaluating or looking at these organizations, I'm interested in your thoughts around due diligence. Do you think that more established financial institutions have been effective in adapting the traditional diligence that they would have done on, you're already shaking your head, adapting it for fintechs, or do you think there's more work to be done there? There's more work to be done. Yeah, absolutely. Okay. And I think it's fundamentally a challenge of the incumbent mentality and attitude. Yeah. And that level of proportionality doesn't necessarily translate across all of large organizations. It's like dropping a pebble in a pond.
Yeah.
Right near the pebble, they get it. But the further you go away from that epicenter, you go back to the status quo and the incumbent culture. And effectiveness requires maintaining that ripple throughout the entire organization,
Yeah.
and that can be a challenge.
Right, okay, that makes sense. That makes sense. I just wanted to pick up a point that Kirsten had raised earlier just about intellectual property. Alison, just your thoughts in terms of some of the businesses that we're seeing and at various stages. Do you think that they are concerned about having their IP stolen?
Yes and no. That's a real lawyer's
That's
answer.
good. That's a good lawyer's answer. Okay, go on.
Yeah, it really depends. I think any business needs to understand what it has. Point one, needs to understand what it has so that you can value that and look at how you best commercialize it in terms of what you do with it. And that informs the commercial model that you go for. But within that, there's a whole spectrum. If you're a fintech with a sole solution that is the crown jewels, to use the colloquialism, then it's correct and proper that you have robust IPR protections. But if you're a serial developer and it's not as crucial one step to the next, or you're happy to pass it over and move on to the next thing, then you won't be as bothered.
Yeah.
But I'd say it's know what you have and what your objectives are.
Yeah, no, that
with
makes
it.
sense. That makes a lot of sense, yeah. And I suppose, Mia, just when thinking about the other side of it, when you're approaching various financial institutions and you're pitching and trying to get your product and match it up to their aspirations, how clear do you find that they are about what they're trying to achieve to give you that steer to help you with the sales process?
Yeah, I think generally they're very clear about what they're looking for. And as an industry, it's very trust-based. This was discussed. So I think having sort of deep connections and credibility and relationships really helps. So fortunately, our team, we've been really fortunate having a serial entrepreneur as founder who previously founded Pintrex and exited to Exponent for 220 million. We've got that, and plus if all of us have built networks. Previously I worked for London & Partners, the Mayor of London's promotional company, so I worked really closely with the banks and Fintechs as well, so really understanding the ecosystem. But I think as long as we can be sure that we're aligned, as you say, in our objectives, and also what we found is having that clear roadmap as well, so we can be so clear, this is what we're trying to achieve, these are the problems we want to help you solve, and here's a roadmap that has objectives, KPIs, and timescales attached to it, because otherwise it is very difficult. And as you say, we always want to appear like we're calm and smooth, sailing smoothly like a swan, very nonchalant, but actually, we have to think about survival and how, runway and how we're going to scale. So I think having the clear communication as well. I mean, I'm from Silicon Valley, so I really appreciate the direct and frank no sometimes is a lot better, and actually giving us candid feedback, like, no, this isn't right, and this is why, and then we can take that and learn from it.
Yeah, and do you find that it sometimes can be a struggle to get in front of the right people or the right decision makers?
Yes, I mean, that's then another thing. We've had some great feedback from people saying you're pitching it to the wrong people.
Right.
So again, having those insights and sometimes just talking to your contacts and getting that candid feedback to make sure you're approaching the right people in the bank, the right decision makers, and that you're tailoring that solution to them, and having more of a discussion, because if it's going to be a collaboration, it's really about how can we solve your problems now, but also long term, how can we solve your future problems that you haven't even considered yet.
Yeah, okay. And Kirsten, just thinking about some of the businesses that you're working with, how would you advise them to use collaboration as a way for them to scale?
So for a lot of the companies we work with, for the first customer, a large corporate, I think they can use it as a route to market or a fantastic first case study. So I think, if you've got BAE Systems or Barclays or Aviva as your first paying customer, even if we had an example recently with a Turkish company who did a POC with Nominet. I know it was actually for such a small fee, but now they can go out to the UK market and say, we've got Nominet as a paying customer. It doesn't matter what they've paid. No one questions it. The fact that somebody's taken the risk and it's brought from them. So the biggest sort of tips we give the startups we work with is also coming back to what you said, is really having a clear roadmap, because you can, as a startup, your time is so precious. So you can waste an awful lot of time going through multiple meetings with corporates that might never end anywhere. So we always always say, really try and ask those tough questions, like, will we have a follow-up meeting? Because so many startups come back to our office and they're like, wow, we just had a great meeting. We're like, well, what's the outcome? And they're like, oh, we don't know. Like, they just didn't ask because they're a little too shy to push. Like, you know, just so always pushing, you know, whatever your goal is from the first meeting towards the second and the third. And I suppose just my one final tip that we sometimes see from our companies is, so a lot of our companies try and sell to CISOs, or Chief Information Security Officers. And again, sort of coming back to what you were saying, you know, not just selling your product, because they'll sit in front of a CISO and they'll say, well, you know, our product is so much better. And then the CISO will get up and leave, and I'm like, so what did you think? And they're like, they actually just offended me because they sort of offended, like, I've made a decision to buy XYZ product, and they've just told me that it's terrible. Yeah, and so just be a little cognizant of, you know, saying, well, that's a great product and ours can complement it, because, you know, they've signed off on that for their yearly budget or wherever it may be. So just putting yourself in the corporate's shoes and sometimes and not just trying to force your product.
Yeah, that's a good tip. Okay. Very happy to take some questions from the floor if anyone has any questions for the panel. Oh, we've got some questions behind me. There we go. Okay, well, let's pick some of these then. So, Elie, what about the second one down there? Will tech giants and finance incumbents simply buy and swallow disruptors rather than collaborating?
That's a good question.
Yeah.
So the answer is, I mean, it's a maybe. It depends on the scenario and the situation. You know, some startups stand on their own logically.
Yeah.
Others are designed for that very purpose.
Yeah.
And you have to take each on its own merit. And you know, a lot of startups and founders I know, you know, that's their dream goal. And for others, they will go down with the ship before that happens. So it really just depends on the scenario.
Yeah, no, fair enough. But I suppose, well, kind of linked point is the bottom question, Tyler. Interested in your views on that, which just went, which was about was actually about how established players can work with fintechs but without suffocating them.
Yeah.
What's your views on that? How do you do that?
I do think the model of engagement has to match, obviously, the goals of both sides. And it has to be, I think, good recognition, as there is at Barclays, you know, and other large institutions, that we are the problem sometimes. You know, that there is a difficulty in thriving in a large organisation, so that needs to be addressed as much as customer needs. That may be looking at all of your policies and procedures, and you know, Elie and I were having a discussion beforehand. The hard task is deconstructing all of those back to your principles, what are your main concerns, and they're not completely reconstructing them. Finding a new way of working, that's where we can take, obviously, inspiration from fintechs to be creative.
Yeah.
The ideas, of course, don't all have to come from us. We're lucky we have very supportive regulators. FC Innovate team is, you know, a telephone call away.
Yeah.
And our engagement with the ecosystem as well, through our accelerators and through partnerships and through deals we've done in the past, I suppose, is a constant education.
Sure.
So it's making it a priority, and then just trying and iterating. It's no simple fix, unfortunately. There's no one answer, as you can tell from the way I'm answering this.
Yeah, no,
but it's really
enough,
just making it a priority that each of these companies can realize their goals in that collaboration.
Yeah, and being aware of the issue is part of the battle, I guess, as well. Yeah, okay. All right, well, we're nearly out of time. I suppose I'd just ask you all the kind of very general question that we always like to do at these things, which is to sort of do a 5-year look ahead.
Go till 3, so take a few more questions.
Okay, thanks for that. Okay, well, that was going to be the wrap-up question, but I'll keep going and asking it anyway. Where do you think we're going to be in 5 years' time in terms of this whole collaboration agenda, particularly around collaboration? So, Kirsten, do you want to take us off? Crystal ball time.
Yeah, 5 years from now.
There'll be more collaboration?
Yeah, really interesting. I mean, I would find it hard to believe that there wouldn't be more collaboration. I think startups have so much support now, so much know-how from their peers, but also from large corporates, navigating them through, the sometimes quite tricky landscape of collaboration. So I think we'll just see more and more collaboration.
Mm-hmm. Yeah, okay. Mia, any thoughts?
Well, as it happens, we spoke about Fintech trends last week. So our main message there was that everything is moving toward the platform model. So leaders are curating marketplaces and ecosystems like Amazon. And I think we'll see more of that. And it's really exciting now because so much of it's converging. So we'll see tech giants going into financial services. We'll see them making it easier to collaborate with Fintechs and other tech startups. And it's going to be an exciting kind of time of collaboration, convergence, and I would say ultimately user-centric to benefit the customer and provide the best customer experience.
Sure, okay, interesting, yeah.
Yeah, I'd agree. I think there is only one direction of travel, and we've shown that the sophistication is coming on both sides, so that will help. But I agree with Mia. I think the ball game is going to change quite quickly and quite dramatically with the big players. So we might be in a whole different league.
Yeah, there's always that discussion about are we not talking about the people that actually might have the biggest impact?
Yeah.
Okay, Elie, what do you think?
I think the feedback loop of the current collaboration will kick in by then, and that'll give people an impetus. Actually, this thing really works.
Yeah.
You'll see some double down, and others say we just can't do this.
Yeah. Okay. Yeah. Okay.
I suppose one of the things that's come through in a lot of the answers is large institutions have a bit of work to do, and there's been one approach in the past. I think what people are starting to see now, looking ahead 5 years, is, now working myself with UK Ventures, effectively a startup at Barclays, people within large institutions won't just take one approach. One size fits all, there's no place for that in the new world. So I think actually in some ways the distinction between the approach of large institutions and fintechs will be broken down, particularly as big banks and insurers find that they have to put teams and resources and technology behind doing things in a different way.
Yeah, okay. And I guess there was a question that flashed up earlier, and I was going to take just half of the question, because it was talking about good reasons for doing a collaboration, but the other half of it was good reasons for stopping a collaboration. Elie, any thoughts on that? What the circumstances in which you might say, actually, this isn't one we should continue with?
Yes, startups have a certain amount of runway, and corporates have a minimum time to do anything. And up front, both parties have to really understand, is the time frame going to work for both? Yeah. And if it's just not going to work, then conversation should stop for everyone's sake.
Right. Okay. Yeah. Tyler?
I agree.
Yeah.
I think in the new world, the thing that's going to distinguish a lot of big companies versus our competitors is going to be ease of working with us. And so your reputation is so important. You can't afford the death by 1,000 maybes anymore.
Yeah.
I think it's absolutely essential, therefore, to lay out those needs and demands and the roadmap up front and to decide whether or not to go ahead. And if not, then this is one case where failing fast is absolutely important.
Sure. And Mia, anything that you would add to that, just from your perspective, that would make you perhaps stop a collaboration or reconsider going into one?
Yeah, I definitely agree about runway and just being clear on your objectives as well. But I think just direct, honest communication is always the best policy.
Yeah, okay. What have we got here then? So the procurement and contracting process, Alison, we deal with this a bit in terms of our work with large sourcing businesses. Do you think there is a difference between the process when it comes to dealing with startups versus dealing with much more mature businesses?
Yes, I think there's, going back to the point about awareness and sophistication of the incumbents, I think there's an awareness that it's not our way or the highway anymore, and there has to be some give and take there. Yeah. And we're seeing that through the accelerators, but also just in terms of general procuring solutions. There's a willingness to build some flexibility into that. And it does depend on who's across the table or who they're most interested in, but at least it's coming, because that never existed before. And there's certainly that willingness to adapt and tailor make.
Yeah, the kind of recognition that a 50-page contract isn't necessarily...
It's a sledgehammer to crack a nut. And it's
Exactly, yeah, for sure. Okay, Kirsten, here's one for you. How should startups solve the chicken and egg problem of needing a customer to build a solution but not able to get the customer without having a finished product to show them?
Yeah. I mean, that's always the catch-22, right? It's mission impossible. But we had an example of a company like this on our previous cohort, and so they joined the program with basically an idea. And yet, and it was also a single founder, so a huge challenge, and he's building a cybersecurity product and hoping to sell to large institutions. So that's a tough gig. But he managed to get a few POCs. So by literally and he again, a typical example of a great founder. He came from the sector. He knew the problem inside out. He slowly went about building up those relationships, and he was like, in his instance, the product he was building wasn't deeply technical, and it was very easy to understand. And so everyone he spoke to, it was about supplying your about securing your third-party supply chain. So, it's a concept that everyone is going through at the moment. Everyone understands it. It's a problem that a lot of organizations are facing. And so he could describe the problem so articulately and so concisely that he managed to get a few signed POCs to already pay a little bit upfront, which enabled him to build the product. So he promised, if I build this in 3 months' time, will you trial it? The answer was yes, yes, yes. He obviously got a handful of no's as well, but enough yeses to then give him the funding to build the product. And that was now almost 6 months ago, and now those customers are trialing it. So, it's so tough. Come across this previously. I worked at Seedcamp. They're one of Europe's most active seed investors. So come across this problem time and time over. But I think if you build a relationship and you build trust and you're actually building something that your customers need, the fact that you're having that dialogue with them upfront as you're building the product does mean that once your product is ready for market, the customers want it, and it's built and designed in the way that the customers are actually going to use it. So you can sort of use it to your advantage.
Sure, yeah. And Elie, from your perspective, how much faith are you willing to have in sort of early stage without seeing a product? How do you get that balance right?
It's really tough because you're internally selling at the same time, especially in a regulated business that has consequence. So it's a fundamental challenge of fintech startups. Trust versus, and even if they have a product, are they going to be around in 12 months' time? Are you depending on them for something mission critical? So I don't know if anyone has an answer to that question, but this is where things like collaboration become really critical, because if you can help support them more than just being a supplier, client, it mitigates some of that risk. So it really depends on the maturity of the business, and have they broken even? Have they taken off? Or are they still on that runway? That plays a big part into decision making.
Yeah, I guess that would be the case. And I suppose just it's that capturing you with something that you think, we can go along this journey, I suppose. And go back to the point earlier Alison was talking about around procurement. I suppose it's chunking things up. It's not necessarily thinking, right, let's do the 100-page contract for the end goal. Let's do the 5-page one to get us to this stage, and then let's reevaluate, I guess. Yeah. Okay. So I think we've answered that latest question in some ways. I guess I'm not sure I understand the second one down, so if the person that put that one in, if they could elaborate a little bit, unless I'm being dense up here. But okay, well, I'm just trying to understand why innovation units would be a significant threat to startups, considering resources, etc. Is it me, or?
Is that maybe they think innovation team might build the product themselves?
Well, let's find out. There we go. Yeah, there you go. Explain yourself.
I shall. So I've worked for SocGen, and they had an innovation unit. And it was very, very interesting. I don't think SocGen are the only one. I think other financial incumbents also have very interesting innovation units where they, rather than talent leaving and trying to start up their own startups, they encourage people to actually say, okay, we'll actually provide some of the resources and support you may need for your idea. And so, yes, I was wondering whether or not, and obviously that's less risk. In a way, obviously there might be a lot less reward, but there's a lot less risk too. Do the panel think that that's a significant threat to startups and potential startups.
Right, so you're talking about people being encouraged to incubate new ideas within
Exactly, yeah.
the incumbent organisation rather than going off and setting up startups. Got a view?
I personally don't. I think the idea of an innovation team set up in the way that you've described is probably just yet another approach. Equally, I know at Barclays we very successfully pursue what we call entrepreneurship, which is a word that only a bank would come up with. Great people with great ideas, where actually we recognise the way for that business to grow is for them to work outside of Barclays and outside of that regulatory net, to have an opportunity to be agile and maybe, for example, for purposes of making their business successful, working on a multi-bank basis with many financial institutions, so transferring the IP out, maybe taking a bit of equity as a part of that, or indeed putting cash in. So I think I probably in this case disagree with the question that I wouldn't see it as a threat. I would just see it as yet another way of working. The most important thing is really to go back to, okay, what are we trying to achieve here? How can both parties co-create value together? And I think that change in mindset is the most important part of collaboration, and then finding the structure to match.
Yeah.
I agree with Tyler. I mean, fundamentally, startups exist because corporates don't do this very well. And if this was a threat in that traditional way, it would have been all the time, and actually we wouldn't be even having this conference.
Yeah, okay, there you go. Okay, one more question I'm allowed.
I had a question. I think it was Kirsten was mentioning the previous example. The founder was able to talk to a lot of these people and kind of explain his solution to them and got some buy-in. So I was curious what you would suggest some of the best ways startups kind of actually get in front of these people and start the conversation so that they can, potentially get some buy-in.
Yeah, I mean, great question, because I think that's the challenging part, right? Getting in front of the right people and having that honest and candid feedback. And so, one example of that is joining an acceleration program, but if you don't want to give away, typically you'd have to give away a little bit of equity for that, and typically they're 3 months. There's some wonderful ones out there. In the US, it's YC, but here, I mean, if it's fintech, you've got Startup Bootcamp, you've got Techstars, you're spoiled for choice, right? The other places to look at perhaps like more co-working spaces. So Mia, you mentioned you're at level 39. I know they host a ton of events. Or just to try and, but I mean, it's much smaller scale, but we've seen this happen, try and get 1 or 2 mentors, and ideally from sectors where you're trying to sell into, maybe like a non-exec, a board of people in the right sort of the right profile of who you're looking to sell to. But again, that would probably be smaller numbers. So just to give an example, at CyLon, every one of our companies would meet sort of one-to-one mentoring sessions, like 130 people. And if you could sit in front of 130 people within a 3-month window, that's fantastic, because you'll probably convert, even if you convert 10 of them, that's great. So it's hard, apart from going to a co-working space or an accelerator, I'm not quite sure where you'd get that volume of interactions. And there's just so many meetups in London, events like this, but I suppose that's, again, slightly more ad hoc. So yeah, I think accelerators are, I'd say the biggest value any accelerator can give you is the network, and really making sure you find the right fit for your idea will hopefully be really fruitful.
Yeah, there you go, top tips then. Okay, so we draw it to a close there? Okay, well, thanks everyone, and thanks very much for the questions that you all posed, which were really useful and thought-provoking, and I'd really just like to thank my panel for their great contributions.
Thank you so much.
Thank you. Big round.